Hey, how's it going, everybody? Welcome back to the channel. Before we get started, please drop a like, subscribe, turn post notifications on, and let's get right into the video. But also, remember, this is just for entertainment purposes. I am no financial advisor. Just because I do stuff doesn't mean you guys have to do stuff. You do your own due diligence, do your own stuff. This is for entertainment purposes, okay? But this account, this is my brother's account. This is the little smaller account that we have here. My other account is the main account is the one that has about 36,000 ish dollars. This is my brother's account, okay? And account is basically kind of like a account that if I were to start right now, this is kind of the account how I would do it, right? This account is basically all or mostly most of the stocks that I have in my main account, but more diversified, and it's like all the money is allocated more evenly, more distributed between all, so nothing is like overweight. See, if we look at let's see the total equity on this account, there's really nothing more than $500 and nothing less than 200, so everything is more equally distributed, and we don't have any margin use. As you can see, we have no margin use. We actually have $5,000 in cash on the side, and most of it is just using what we have here is Robinhood Gold that we get 4.9% interest on our money with the 5,000. So with that money, we're getting monthly interest rate. Also, we have a bunch of cash on the side just in case we see any kind of downturn. So this account's more conservative compared to my other account, but even then, this account would be more risky than most accounts, right? For me and my brother, we have a higher risk tolerance. We are younger. We're not even close to being retired, so we have a higher risk. So if we lose everything, we can always make this money back and still have many multiple decades to invest without being really worried. My brother is 18 years old. I am 24 years old. So we're just basically getting started. Even though I haven't been investing for quite a while already, I've been passing on like knowledge to my brother, so he kind of like has been learning from my mistakes. Like I said, my other account, I have lost multiple 10,000, almost $100,000 I lost in the other account because of the mistakes I've made, in which I've learned, and I try to pass it on to the people that I know, so they don't make the big mistakes that I make, so they kind of are ahead of the curve, kind of passing on knowledge to the next generation so they can be better. That's kind of like the main goal. But let's go over the portfolio. This portfolio, we are well over 10,000. Last week we were just about 10,000. Now we're well over 10,000. So we are well over the threshold of 10,000 mark. Now we're trying to get to 15,000. The year to date portfolio is up about 16.9%, and this is with only using about half of the money that we have invested, which is pretty good. So let's say if we were using all the cash, it would probably be up double, right? Probably be up 32 or 33%, which is pretty good. And for this account, we do have two ETFs that we have. We have this QQQ, Investco QQQ ETF, which I wanted to be a little bit less risky with this account. So we have QQQ, which you see here, $300 up 23%, pretty good. And then we have SCHD, this one right here. We have $207. We're only up 1%. I like this one because of the dividend that it has. I want to slowly build this one up to so we can have like a couple $100 in dividend payments coming into the future. So this might take years to do, but in the long term, I think it would be very nice to get those dividend payments, those $100 payments. And I will eventually start a dividend only portfolio. I think that would be pretty cool to have a portfolio only for dividends. Imagine having like 20 or 30 dividend stocks, and then you're getting like basically a payment every day of here like $5, $10, $20. Start getting $20 payments every here and there. That's a pretty big portfolio, right? So we have here Amazon did have earnings, and they did very well. You can see here that we're up 46% on this one. So Amazon doing very well. I think Amazon's still a buy, up 46%. Very good, very good. Google right here, we're up 27% on Google. Very good, $300. With this portfolio, we add about $5 to $10 every single week to each stock and ETF, so we can slowly grow over time. Maybe eventually we'll start upping the ante and maybe put in like 10 or 15 bucks, so maybe double the amount that we usually put in to make that account grow faster. Next one we have here, Meta. Meta has also been going stupid, up 100% already on this account. And most of these stocks that we have here, I don't really plan on selling them. I plan on just holding for a very long time. Once you have like companies that you love, you really shouldn't sell them, except if you have like a very good reason to. Like if the stock goes up a lot, okay, maybe sell it. Maybe if it goes up like multiple years of what you think it should go up. Like if you were expecting Amazon to be say a $300 stock, right, and it just goes up to $300 randomly one day out of nowhere, and it just basically locked in years of growth already, then maybe we might as well sell, right? But other than that, I would not sell a stock unless the company just goes the opposite of what I thought was going to happen, like something went wrong with the company and management or whatever, or that what I just said. Then I probably wouldn't sell anything, and I would continue to buy, and I would buy whenever the stock dips, right? Like the next one that we have here, Tesla. This was something that you could have been buying every dip, and you probably still be up hundreds of percents. Like if you would have bought here, and if you would have just sold at this first peak and you never bought back, or you sold everything, you try to time the market, who would have known that the Tesla would have been up as much as it is right now, right? Tesla's just been a rocket going up, but also been going down. So whenever those corrections happen in the stock, you buy it and build up the portfolio, and it will continue to go up as long as you have very good companies, right? And for Tesla, we're up also 52%, 53%, pretty good. I think Tesla will be back to all-time highs in like a year, 2 years. So Tesla could be up to $400+ in the next 2 years, I believe. Next one, Shopify. Shopify has been going down a little bit. We're up only 25% on this one. And then we have Palantir. Palantir has earnings tomorrow, so be ready for that one. Palantir, 18, could go down to 15, could go up to 22 plus. Be ready for that. We're up 119%, so if we see this baby go up to 24 bucks, we're going to be up 200%. So that's kind of the move we want to see with Palantir. Or it doesn't really matter. If it goes down, we'll buy some more. If it goes up, we'll hold and wait for another time for it to go down, and then we'll buy some. Same thing. ChargePoint, I think this is the only one that we might be in the red. We're down 17%. ChargePoint is one of the only ones that we have here that are not profitable, I believe. Next one, Nvidia. Nvidia's been going crazy. We're up 100%. Another one that's in the triple-digit percentages, which is pretty cool. Up 101, almost 102%. Next one, AMD. AMD, we are up 38.3%. AMD might be a buy if it continues to go down. I might be adding AMD to the main portfolio. Just AMD might have some trouble in the next year, but after that, should be smooth sailing upwards. So if AMD can continue to go down, I'll be happy to buy some of that. Then we have PayPal, another one that went down a little bit. We're up down 2% on this. I think PayPal's still pretty good buy. PayPal can double, triple up, and then people will still think it's a good value, right? And I can easily see PayPal going up double, right? Double. Just you gotta be patient, right? Buy whenever you can. And do your own research. Remember, do your own research, guys. But yeah, this little portfolio. Maybe one day I'll start a portfolio from zero, exactly like a $0 account. Because right now I have like a main portfolio with about $30,000, and I have this one with 10,000. And then I will probably start a portfolio where we start from zero, starting from zero scratch, and see how I would build a portfolio from scratch. And then maybe I'll have another account where we do dividends only. so we can have about 4 accounts where we can mess with different strategies, you know. But yeah, that's it for this one. Thanks for watching, guys, and I'll see you guys in the next one.